Stocks, commodities, indices, currencies, crypto. Where do I start? Let's start with a deep breath. Hey, I'm Sam, a market analyst at eToro. In this video, we're going to walk through some of the most popular asset classes so you'll feel much more comfortable the next time you hear them. So, here we go. Stocks. Stocks are shares of ownership in a public company. Each share has a value based on the company's total worth divided by the total available number of shares. Stock prices vary during trading hours and can be influenced by supply and demand factors and other variables such as a company's report and economic or geopolitical events. Cryptoassets. Cryptoassets are fundamentally decentralized digital assets created for online use. The first crypto asset, Bitcoin, which was created in 2008, is still by far the most popular, influential, and largest crypto out there. However, it is important to understand that more than a decade after the inception of Bitcoin, and with more than 12,000 other crypto assets out there, the crypto sector is still in its infancy and is more volatile than other asset classes. Indices. Indices are stock indexes that measure the performance of a regional group of stocks over time. Some of the most famous indices are probably ones you'll have heard mentioned before, like the American S&P 500, Dow Jones, and NASDAQ indices. So if you believe a certain area of the world will prosper in the future, you can consider buying an index exposed to that economy and potentially enjoy the region's success. ETFs. Not too dissimilar to an index, an ETF or exchange traded fund is a basket of instruments usually designed to track a specific segment or sector of the financial market. So if indices track performance of stocks that share the same region, ETFs can track different kinds of asset classes like stocks, bonds, currencies, and commodities that share the same market sector. Commodities. A commodity is a basic good or raw material like oil or gold that is used to produce more complex goods. One may decide to invest in a certain commodity based on the swings in its supply and demand. So, for example, if you expect a great demand for heating oil in the next winter, you may consider to invest in it, assuming that its price may probably rise. Currencies. Currency investing, aka foreign exchange or forex, is the process of buying and selling currencies. For example, some investors may want to invest in the US dollar as they believe that with rising interest rates, it will continue to strengthen. To sum it up in one word, diversify. We've covered 6 of the most prominent asset classes. Most investors diversify and pick investments from different asset classes in order to manage risk. So if one of the asset classes drops, the other ones will cover it and mitigate the loss. So if there's one word to remember besides all the asset classes we've just learned, it's diversification. But more on that on our following videos. See you there.